Hello, everybody. This is Alan from Alan Talks FinTech. Today, I'm going to talk about some of my stock transactions for the month of August 2019. We'll go over what I bought and sold, and then how it's done during that month. And then we'll go over some of the stocks, look at their charts, look at their dividends, and things like that. Here's my list of stock transactions for the month of August so far. Today is August 24th, so it's not the complete month. And I sorted my list by stock symbol and then date. So one thing I've been doing this month is buying more of ABV, ABBV. It's dropped down to a fairly good price, down in the mid 60s. It's a good dividend stock, paying over 6% dividend, and it's now getting down into a range where it's actually a very good buy. So I bought some more of that. The other one I bought also was Arbor Realty Trust, ABR. They were getting down in the low $12 range, which is fairly good for them. They have over a 9% dividend, and I picked up another 100 shares of them. Now, the next company, APPS, Digital Turbine, I bought 200 shares of them at $6.85. As of Friday, they were at $7.22. If they drop below $7, I'll probably buy some more. This is one of those I hope will go up quite a bit, but we'll see. Another one I bought more of was British Petroleum, BP. BP is a pretty good buy down in the $36 range, and if it actually goes below that, I'll buy even more. They also pay over a 6% dividend. Oil companies have been taking a hit lately. There's a glut of oil on the market, but I'm not really buying because of that. I'm really buying because of the dividend. So if you can get it down around $36 or even lower, pretty good buy. A stock that I bought and kind of sold was CrowdStrike, CRWD, cloud-based company, security, cybersecurity kind of company. It's been in the $80 range. It's gone up, gone down. The next one I bought, Energy Transfer, ET. Now, I originally had that in a brokerage account, a taxable account, and so I didn't really want to pay taxes on it, on the dividends. So I sold it in my brokerage taxable account, and I bought it in a tax deferred account in an IRA. So it's a pretty good buy. You can see I bought it at $14 a share, but now it's at $13. If it gets down in the $12 range, I'd go ahead and buy it. It's in the 9% dividend, or they call it distribution range. So good buy. I do buy some of Fidelity's zero fee mutual funds. One of them is called FZROX. If I have extra money just sitting there, I'll just put that entire money down to the penny into FZROX. It's a total market mutual fund, no fees, and you can buy down to the penny. So, like, say you have $50.31, you can buy $50.31 of FZROX. They've gone down a little bit lately because the market's gone down. They go up, they go down. Now, the interesting thing about this mutual fund, they started the fund last August, so August 2018, and the starting price was $10. And then when the whole stock market went down at the end of 2018, it was down in the high $8 range or something like that. So you could have bought it then. But it's interesting, it's at 10.08 right now. So that kind of goes to show you the stock market really hasn't done much since August of last year, of August of 2018. So from August 2018 to August 2019, stock market hasn't done a whole lot. The next one I bought a little bit more of was Kraft Heinz, KHC. Maybe I shouldn't be buying it because the price keeps dropping. It's now down around $25. I bought it at $26.69. I'm mainly buying it for the dividend. eventually it will straighten out all its business practices and get back in good graces of the Standard & Poor's. The other one I bought some more of, MITT, which is a REIT type company. If it gets down below $15, go ahead and buy it. It's a 13% dividend right now. We'll talk a little bit about it some more. Altria, MO, I had about 150 shares of that. I ended up selling them, made a little bit of money on that. Thought I'd get out of that. It's a little controversial type stock because, it's a cigarette type company. They pay very good dividends, but thought, well, should probably get out of that. The other one I've sold, I had bought earlier in the years, OKTA, OKTA. They're a single sign-on cloud-based company. If their price drops down in the around $110, I'll probably buy some more. They're probably more than likely going to go up in the high $100 range at some point. So you won't exactly double your money, but you might get 50% at some point. At least I'm hoping. Another one I sold and then kind of bought again was Pinterest, PINS. It's been in the $30 range. If it gets below $30 a share, I'll probably buy some more. We'll look at the chart a little bit later. It's been doing okay. Royal Dutch Shell B class, RDSB. This one I've been watching for quite a while, and I've been buying as it goes down. So I bought some at $59 and some at $56, but right now it's in the $55 range. About a month or so ago, it was around $65. So it goes show you the change in the price of oil, how that affects these stocks. But they pay over a 6% dividend very regularly. So that's why I'm really buying it. It's more kind of long-term thinking. But, if you want to buy the dips, this might be one stock. It will come back at some point. Slack, which is a kind of a online chat or collaboration company. Ticker is WORK, WORK. I bought 100 shares. This one, maybe I shouldn't have really bought 100 shares because I bought around 33 and now it's down around 30. They're fairly well known in the IT industry. The question will be, how do they make money? Can they diversify their products? So now let's go over some of the companies and individually, and we'll take a look at them. The first company let's take a look at is AbbVie, healthcare company. They're going to buy Allergan, and that's probably why their stock price has dived. Plus their main product, Humira, is starting to lose some of its patent protection, either recently or in upcoming years. So there's kind of a fear that the cash cow of AbbVie will decline. So you'll see the price has gone down quite a bit. It's been up in the 120 range at one point, like last year. Now it's down around 65. Main reason I've been buying it because it pays a over 6% dividend. Right now it's 6.49, and that's a pretty good deal if you're looking for dividends and want to diversify. The price of AbbVie should go back up in the future once the Allergan transaction completes, and then they start reporting earnings. Then the two companies combined should do fairly well, but it's kind of a more longer term play. Arbor Realty Trust, ABR. So this is a REIT basically. Current price is around $12.48 as of this recording. Pays around a 9% dividend. As you can see by the chart, it's been kind of going up and up and up. If it gets down around $10 range, you definitely would want to buy it. But for a 9% dividend for a REIT, not too bad. Fairly good company. One to check out. Buy it at the right price. Let it drop back on these pullbacks, and then buy it there. And then this be one you'd want to hold for a while. Here's a new company that I just noticed. The company's been around actually a long time. You can go back a ways and see that they've been around. I didn't know anything about them, but when I was looking on FinViz and other places researching stocks, this one kept coming up because as you can see in the chart, it's been growing a lot in the stock price over the last 2 years, and especially within the last month or so. So I bought some of these around, I think it was $6.85. I bought 200 shares, and then that same day that I bought it, it was up around $7.20. So it's in the $7 range right now. We'll see how it holds on. It has the company produces some product called Ignite, which helps to monetize digital type applications. So basically advertising, I think, and things like that. I bought 200 shares. Less than $1,500. So we'll see how it runs. I'll probably be kicking myself. Wish I'd bought 10,000 shares. Next one is British Petroleum Oil. This one I've held for quite a while, and I watch it every day. And so when it started dropping back down in the $36 range or even lower, it's kind of a time to buy. Fairly stable company, pays over 6% dividend. You don't hear a whole lot about them, except over in the United Kingdom, they were getting a little bit of flack for being a carbon producing company, an oil company essentially. So there were some funds over there that was dropping BP oil. The price of their stock price has probably gone down more, a reflection of the price of oil right now. But they're not just make all their money off the price of oil. They do other stuff. CrowdStrike, which is kind of a cybersecurity company, it's one of those cloud-based companies that if you've seen my other videos, I've listed some of the cloud-based companies that I kind of follow, and this is one of them, and I've kind of bought and sold them. The price range has been $65 to $100 lately. You can see it's moved a lot. I wouldn't be surprised if this one ends up, 150 or something at some point. So, one to take a look at, along with all the other cloud-based companies, which seem to be getting a lot of attention right now. Energy Transfer. This is another, this is a MLP type company. They pay distributions. I held them in a brokerage account, taxable account, and then I decided to move them back into so I sold it in my brokerage account, and then I bought it in my IRA so that the earnings wouldn't be taxable. So they pay about a 9% dividend. Price range is from 11 to 18. So you've been seeing that they kind of pulled back recently. There's no real reason why they should be pulling back. They're a fairly stable company, pay good dividend. Take advantage if the price goes even lower. MITT, AG Mortgage Investment Trust. So kind of a REIT type company. So you can see the price range from $15 to $19, currently around $15. This is one of those companies will never, they'll never double or triple in price. You're really buying for their dividend, which is around 13%. And of course, because of that, they could have issues due to interest rates and the real estate market and things like that. So OKTA, OKTA. So another fairly new company. They have been around, several years. I think the guy that was kind of running or started OKTA used to work at Salesforce, and then he started this company for single sign-on. So what that kind of means is when you log into a website, you can log into their user database that they have at that particular company. Say you log on to Google, so they have a little database of user IDs and passwords. So OKTA kind of helps with all of that, providing one sign-on that you can use across multiple websites, multiple companies, and that kind of, they call it single sign-on, authentication type access. You'll probably see this company grow quite a bit. You see as their chart, they've been on a steady climb. If you get a little bit of a pullback, I would buy them. They will keep going. This will probably be a $200 stock at some point. Not a 10 bagger, but if you'd bought over a year ago, it could, you would have got 5 times maybe, but not now. It'll probably double in price at some point. A lot of these stocks, when they get up around $200 a share, they kind of stall. And so they got to have quite a bit of income and growth to go over that $200 share price. Pinterest, PINS, been kind of flat recently. They had good earnings in their last report, jumped up, and now they're up around $34. This might be a company kind of like Etsy and some of those other companies that is not a high growth company and serves a certain niche. Like women apparently like their website, just the way information is presented and the type of collaboration on the website. So it definitely has a certain audience. Now, whether that will cause their revenues to grow or not, I'm not really sure. With all of these, it all comes down to advertising. If they can monetize on that, then Pinterest could really grow quite a bit. So it'll never be a Facebook, but it could be, something like a much smaller version of something like Facebook. So you could eventually see this being around $100 a share. RDSB, Royal Dutch Shell, B class. Talking about this earlier. Make sure you buy the B class, not the A class, because the B class, the dividends are not taxed, where the A class they are. So you can see the price range, 55 to 76. Right now they're around 55. Could go below that. Pay a really steady dividend over 6%. It's a company that, if you're a dividend investor, it's not a bad buy. This is one Stone CO, Brazilian company, transaction processing payment type company, growing quite rapidly in Brazil. It'll go up, it'll go down. The reason it went down around April on the chart was they issued some more shares, which, millions of shares, additional shares, which diluted the price, and it dropped quite a bit. But you can see it's slowly been making a comeback. It bounces around a lot. If you watch it, you should get a good price off of it. You can get it probably in the $30 range at some point. Slack, which has the stock symbol of work, recently IPO'd company. Slack has been around a long time. Kind of a chat collaboration software. They have gone down in price. I think the reason for that, they haven't really announced earnings. And I think this one will be a difficult one to monetize. But, I said the same thing about MongoDB, MDB. And then, what do you know now? MongoDB is like $140 a share. This one, I'm not really sure because, there's a lot of free access to Slack from the user perspective. I'm not sure this one will grow. If you like what I'm presenting, hit the subscribe button, click like, and also while you're at it, visit my website, Twitter, Instagram, Pinterest. Also, I have the typical affiliate links, Personal Capital, Robinhood, Amazon, and then I host my website on Bluehost. So if you want a discount and you're going to set up a blog on Bluehost, that would be a good link. You get a discount on it. And again, subscribe to my channel, click like, put your comments below, and we'll talk again. If you have any recommendations of stocks you want to talk about, let me know. Leave it in the comments. Till next time, see you later.